The bull market returns. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee. I want to have a look at this article from Yahoo Finance, originally from Reuters, discussing, well, the bulls are back in charge. Now, we saw a huge crypto correction on the weekend, and I was worried that it might flow through to the stock market. I was keeping an eye on it, and when I woke up and I saw my US stocks had bounced back, well, there you go. So it looks like crypto and the stock market, are they no longer correlated, or is just crypto more active? Let's jump over here and have a look. We can see here, you can see the bounce back. This is in the Dow Jones and the S&P 500. S&P 500. You can see it's bounced back, and the good old NASDAQ has bounced back. We're not at all-time highs, but, there you go. A bit of a drastic move, everyone. Has the fear of Omicron disappeared, and are people no longer falling for the same fear that we did in the past? Because, how many people sold the big crash in 2020 and regretted it? How many people bought in when others were afraid? So, shares and oil rally as Omicron worries ebb. Chinese heavyweight Alibaba leaps off low. Government bonds and yen lower as risk appetites return. So, waning Omicron COVID-19 variant worries and a timely booster shot of Chinese stimulus lifted world stock markets and oil on Tuesday and left traders offloading safe haven currencies and bonds again. The FTSE Euro First 300 index was on track for its first back-to-back run of plus 1% gains since February, while Asia saw record bounces for some of China's biggest firms such as Alibaba and Baidu. The risk-on mood also helped the dollar climb against safe haven currencies such as the Japanese yen, which has lost 0.6% overnight, as the confidence-sensitive Australian dollar also found buyers. Safe haven government bonds went the other way, with yields, which move inverse to bond prices, up 2.5% on Germany's benchmark 10-year Bund, after falling to a 3-year low on Monday. Reports in South Africa said Omicron cases that had only shown mild symptoms, and the top US infection disease official, Anthony Fauci, told CNN it does not look like there's a great degree of severity so far. Good news relating to the severity of Omicron should be taken with a pinch of salt. Faster transmission could offset the benefits of milder symptoms, researchers at ING said in a note. More broadly, it is still early days, even if markets are starting to display Omicron fatigue. The gains also came after China's central bank on Monday injected its second shot of stimulus since July by cutting the amount of cash that banks must hold in reserve. There was still uncertainty about its property sector as Evergrande teetered on the brink of default. My understanding is that they have defaulted. Again, but data showing much stronger import growth was a positive sign on the strength of domestic demand, RBC analyst Adam Cole said. Elsewhere, Australia's S&P ASX 200 rose 0.95%, while Japan's Nikkei advanced 2.1% as risk-on sentiment pushed markets higher. MSCI's main Asia ex-Japan benchmark has lost about 5% so far this year, with Hong Kong markets figuring among the biggest losers, while India and Taiwan stocks outperformed. Shares in embattled developer Evergrande edged up 1.7% after hitting a record low on Monday, as markets waited to see if the real estate giant has paid $82.5 million, with a 30-day grace period coming to an end. Elsewhere, markets were supported by gains on Wall Street, where economically sensitive stocks outperformed, while epidemiologists have rightly warned against premature conclusions on Omicron. Markets arguably surmised that last week's brutal sell-off ought to have been milder. Vishnu Varanthan, head of economics and strategy at Mizuho Bank, said in a note. After all, earlier assessments of Omicron cases have been declared mild, spurring half-full relief. Also, supporting the dollar and FX markets was the expectation the Federal Reserve will accelerate the tapering of its bond buying program when it meets next week in response to a tightening labor market. Oil prices jumped 2% to $74.60 a barrel, adding to a near 5% rebound the day before as concerns about the impact of Omicron on global fuel demand eased. Copper prices also ticked higher, while gold was steady at $1,778.50 per ounce. On expectations, U.S. consumer pricing data due later this week will show inflation quickening. So there we go, everyone. The bull market appears to have returned, or what we're seeing. Are we seeing just a dead cat bounce, everyone? But let's zoom out here to 10 years to get a bit of a larger perspective. There you go, everyone. There's the huge sell-off right there. So it went from approaching 30,000 down to 20,000. So, yeah, this is just a little dip, guys. It's just a little dip. We'll have to see how it plays out over the next few months. Well, let's have a bit of a talk. Hopefully, what we're seeing here with Omicron being mild, my understanding is no fatalities have been detected yet. It's been around the world more than initially anticipated. Hopefully, this will be, well, maybe the last wave. What do you think? We'll have to see. Wouldn't it be nice if everything returned to normal next year and we had a nice boring election here in Australia just fighting about housing prices and negative gearing? We'll have to see. Have you invested in the market, everyone? Did you sell out in this last Omicron fear? Were you going short, going long? Let us know in the comments down below. Thanks for watching, guys. And check out this last video on 5 reasons why housing will cool. So it's interesting to keep an eye on the market. Looks like Sydney and Melbourne are cooling off, but still some room for growth in Brisbane. But everything's out the window if immigration picks up. I'll see you next time. Bye for now.